Home is a dream for many, but a home loan, it can feel like a trap for 10, 15 or even 20 years. But here is the good news. With just a little planning and discipline, you could save lakhs in interest and cut your loan by 5 or even 10 years. Let's explore the top 2 ways to reduce both home loan interest and tenure. Number 1. Prepay just 1% every year and slash your loan by 6 months each time. Imagine this, just 1% prepayment can cut your home loan tenure by about 6 months. Do you think 6 months is not a big deal? That's where many people go wrong. Each time you prepay 1%, your loan gets shorter by around 6 months. Do this every year and you will save several years and a lot of interest. It's a simple step but very powerful over time. Okay, to prove the point, let us do a simple calculation. Let us make some assumptions to start with. Loan amount 30 lakh rupees. Interest rate 9%. Tenure 20 years or 240 months. If so, the EMI comes to about 26,992 per month based on the standard formula used for EMI calculation. So far so usual, right? But here's what banks don't usually highlight. In the first year, you mostly pay interest, not principal. Here is the first year's EMI breakdown in a simplified manner. Have a look at it. The principal slowly decreases month after month. So, after 12 months, your outstanding principal stands at 29.43 lakhs. Now, let's say you prepay 30,000 rupees. That's 1% of your original loan. Now, you will have 2 possible outcomes based on your choices. Choice number 1. If you choose to reduce tenure and keep EMI the same, this is what happens. When you prepay 30,000 rupees, your new balance becomes 29.13 lakhs. From the next EMI onward, interest is calculated on this lower amount. That's how you can reduce about 5 to 6 months from your loan instantly. Here is a quick shortcut to estimate tenure savings. Note this down, it will be very useful. For loans at 9%, each 1% prepayment saves about 6 months. If your loan is at a higher rate, say 12%, savings jump to about 8 months. If it's lower, say at 7%, you can expect around 4 months of savings. Whatever the interest, if you prepay 1% every year, your 20-year loan can end in just 15 to 17 years. That's 3 to 5 years of freedom from EMIs. Choice number 2. What happens if you want to keep the tenure same but reduce EMI? If you want to keep the tenure the same after 1% prepayment, your EMI goes down from 26,992 to 26,717. That's 275 less every month or 1% savings. It may sound small, but across 20 years, that's over 66,000 saved. Here is a shortcut formula to estimate EMI drop. At 12% interest, 1% prepayment drops EMI by about 1.2%. At 9%, the EMI drops by about 1%. And at 7% interest, the EMI drops by about 0.8%. As you can see, reducing tenure looks way more effective than choosing to lower EMI, and it's true. But still, if you want a bigger EMI drop while keeping tenure same, there is just one way: prepay more. Now, let's move on to the second most effective way to reduce tenure and EMI. Number 2. Change your bank. Let go of your ego and preference. Modern banks have flashy offices and less paperwork. And your ego or preference or even habit will force you to stick to the same bank, even if the interest rate is a bit higher. Have you ever thought of switching to a different bank, maybe a traditional nationalized one with less automation and more paperwork? Especially if that non-fashionable bank offers lower interest. Here's what happens when you switch to a cheaper bank. Again, you have choices to make. Choice number 1. Keep EMI same, cut tenure. Suppose you are at 9% and you switch to a bank with 8%. And from our 30 lakh loan example, you want to keep EMI fixed at 26,992. Now what happens? Loan finishes in about 16.5 years instead of 20. So you save nearly 3.5 years in tenure. And here comes the second choice. Keep tenure same, cut EMI. Assume again you transfer the loan from your 9% bank to an 8% one, but you choose to keep the 20-year tenure. Now your EMI drops from 26,992 to just 25,093. That's a monthly saving of 1,899 or 4.55 lakhs total over 20 years. So, switching banks sounds good, but how to choose a bank? You can compare bank rates on trusted loan aggregator sites like Bank Bazaar, Paisa Bazaar, or Policy Bazaar. And while switching, don't forget to check foreclosure charges, processing fees, and paperwork. If they are not much, switching banks is a one-time effort for long-term gain. Did you enjoy this video on how to reduce home loan interest and tenure? If so, please hit like and share it with your friends. And don't forget to subscribe for more interesting videos. Thank you.